Hi guys, this will be the weekly review for the previous week that we were discussing price action inside of the Discord channel and what happened versus what we were expecting on price action. Okay, so first of all, we're going to have in our charts the new month opening gaps that I already told you previous videos, and you can see how on the first day of the week, this is the daily chart for the actual contract, set is off. We were expecting to see what price does in close proximity to this lower quadrant, upper quadrant here between December open and November. So we find support here, and then we rebalance the new week opening gap that was also the new month opening gap for February. Okay, so once we were leaving the gap, look how we found support on the previous new month's opening gaps, then the consequent encroachment, and we were opening really close to the 75%, and then we were targeting an imbalance on an hourly chart that I told you, really close to the 25% of this range here, that is from the actual month open to the external liquidity here. And the next day on Thursday before NFP, we reach this level, but we failed to close above it. Look, and on Friday we did an offset here, these longs, and we retrace into the 75% of this gap. Okay, on ES was a bit different. We are trading like on NASDAQ, we are trading above the December opening, like here, and ES is trading inside of this range. You can see this is a monthly open, and we find support in January. There is a yearly open on Monday, and then we close into the gap. We almost tap into the opening of this gap, find support and the consequent encroachment, reach the 50% between these two new month opening gaps. We fail to close above this upper quadrant, and we close just a little bit above the 50% between these two new month opening gaps, that is the event horizon. And on the next day we run this high from Thursday and tap into the new month opening gap and retrace into the 75% of the actual new month opening gap, just like NASDAQ did it, you see. So this is the way that I navigate for my key levels on a high time frame. I basically refer to the monthly opening and the quadrants between gaps from each month, and I frame dealing range based on those levels. And then if we move on to the lower time frames, like an hourly chart, we see how with bodies on Monday we fail to move lower. We close above, respect the consequent encroachment, retrace, close above, then move on to the 75%, come back to discount of the gap, close above, retrace into the 25%, close above again. Now take the buy side, and we reach the new month opening gap again, create relative equal highs around this level, come back into the consequent encroachment. On the next day we open at the 75%, sorry, and then take the relative equal highs, and we were targeting this imbalance. And I told you that this was a key level for my drawn liquidity and this high, because these are in close proximity to this key level here. This is where we can find some kind of we are expecting to see what price does basically around these levels. Okay, so on Friday we just buy almost one tick, tap into this buy side liquidity, and then come back to take these relative equal lows from previous day from NFP, and then close above the new month opening gap again and just tap into the 75%. So basically you can see how we can frame or directional bias, see how the candles are moving in relation to these quadrants and these dealing ranges. Okay, on this day, and let's move on to the 15-minute chart. And we are going to review every day. This is how I journal my trades, even if I did not take the trade, what I did versus what the market did, your expectations versus what the market did. So until you become the same with your expectations, what the market does, that's the ideal. But yeah, so on Monday we have this huge gap here on regular trading hours, and I was expecting to see kind of a deception, but first run into the overnight lows here. Okay, so this was on Monday. I took this little trade here, this short. Okay, so we open, retrace into the gap, and then start to moving and displacing lower. We create this CV here, and we were inside of the macro, so I was trusting and I wanted to see this sell side liquidity purge during that day. And then after that I was expecting to see if we can come back again to tap into the 50% of that gap. Okay, so I want to annotate the time of my entry. You also want to annotate your stop loss like this. How many points from your entry and the time of your entry, at what time the low of the distribution was made, and how many points that entry offered to you. So we had 124 points, and the low was made around 10 and 19 minutes, almost for the 10:20. You will see that many entries in your journal, it's gonna be around the 9:50, 10:20, and 10:50. Around those three macros are basically the time intervals where I want to gauge price. So this is really important to have in your journal, because you can have data from different softwares, companies, and whatever, but it's not the same that when you do you do this manually and you see what price did in that specific timestamp, you are wiring your brain to trust that. And when you see that those patterns form around those time windows, it's better that just plot inside of that stat application, and you see that the low of the day during the AM session is made around the first 30 minutes of the session, but you don't trust the same as if you do it like this. Okay, so after that, I didn't take any trade. I missed all this long, but you can see how after that we move aggressively and we close up of this candle. So this is a breaker, and if you took a long here around 10 20 26, the high of the session from 9:30 to 12, that is the AM session, was made around 11 and 22, and from here to this high, the entry offered 179 points. It was on Monday. So why I put my stop loss here? Because if you can see of these new month opening gaps here, you see how we close below these monthly gaps, and we create an imbalance just to disrespect the 50% of those levels, and we tap perfectly into the consequent encroachment here. So I can trust that the market is not going to come back at, this is what I was expecting, that the price should not come back to the high of this candle here. So after that, my take profit was just a little bit below these relative equal lows here, and then complete reversed and move the opposite side. Okay, so here you can measure this imbalance. This BC, and you are not expecting to come back to the lower portion of this. If you are in a buy program, ideally you should not come back to the lower portion, the 25% of this level. So, and also you have from these levels here the high of this month, so your stop loss can be around here. How many points of stop loss for that entry to that level? 38 points. Okay, and we reached the 50% of the regular trading hours gap here, and then we on the PM session we were moving higher on the market on close macro here. Look how we react to the consequent encroachment of the gap. I actually took that trade here. You see, it was on Monday. Tuesday was here around this. You have an overnight, we clone back again to the new month opening gap. This is just perfect. Look here, come back again, move higher, 25%, reach the consequent encroachment again of the gap, and we were opening just at this level here. It was on Tuesday. Okay, so let's move on to on Tuesday. And we were expecting higher prices, and we wanted to see, we were talking inside of the Discord that we can move and reach some kind of discount array from the previous regular trading hours range, like this. Okay, so was Tuesday opening here. I was expecting to see if we come back to this imbalance here and take these relative equal lows here, but we didn't. What we did was that we used this imbalance from Monday just below the consequent encroachment of the gap. It was Tuesday. Okay, so on Tuesday we open and we retrace into this regular trading hours inversion PD array, because we offer buy side, come back again, and then we close above it, and then we are going to expect to use it as an inversion array here. And we create this little imbalance here around almost at the 950 macro. I took that trade and I show you the execution inside of the community. And I took my almost all my position when we closed the gap on regular trading hours. That was this here, and the buy side final target here. So we use a 15-minute inversion fair value gap from previous day on regular trading hours. We create a little imbalance here around almost the 950 macro, and we took the trade here. We are not expecting the same that the other idea. We're not expecting to come back below this gap here if we are really bullish. So I was trusting that, and my stop loss was just above below this candle. From that entry was 15 points stop loss. And the trade offer 204 points just before the 12th, the launch start, and we reach the new month opening gap high here, and the high was made around 11.40 here. Even if I don't take all this trade, this is how I can trust to hold positions, and when should I close my trades if I don't want to be inside of the launch and being drawn down again. So you will see that most of the times the high, it's made around 11.20 and 11.40. You see, remember the other day here? You see, 11.22 was the high of the AM session from Monday, and from Tuesday the high was made 11.40. This is not random. Okay, it was Tuesday. Wednesday, same. I didn't trade this day. I was not at the office. I was doing something outside of my home, but it was actually a nice day. This is the regular trading hours chart on the 15-minute chart. You see here? So we are looking for something in discount of the previous regular trading hours range. So this is Tuesday, what? 12:30 sell side liquidity from the launch, and we have an imbalance here. What is this? This is Wednesday. So we open basically just at the sell side liquidity from previous launch on previous day, and we have this busy here. So we tap. This is a deception because we gap lower and we are expecting to rebalance the gap and moving higher. We have these relative equal highs and the buy side liquidity just above the new month opening gap high here. You see? So after that, we gap lower, take this as this short-term low here, and then this is a Reaper, this inversion array, and we are expecting to see something to engage once we start to moving higher. How do you know that? Because you are moving outside of the consequent encroachment of this busy in lower time frames in a key time. After 950 or 1020, you can see here we fell to this place lower. ICT was accumulating here orders, taking using this as a reaction block entry, taking here entries, and once we close above the 50% of this, we are closing of the 50% of this inversion and also of this 15 minutes busy. Then we create an order block, and you can trade that order block here at 10:31. Stop loss, you can trust the low of the order block here, or if you want the low of this swing here, if you want it here, and the move over 174 points, and the high was made exactly at the 12th for the launch. So it was a really nice move here that day 8. Okay, so this is the same from Wednesday. Note how we fail to move lower of this level, that is a half deviation of the gap here. On this day, we did a live stream inside of the community, and we were expecting exactly this because we had very nice moves on the previous 3 days, and it was one day before NFP, and we had also Amazon earnings at the close. You can expect this, and I told you that the best macro for look for a trade on this day was at the market at close. It was the best move of the day. I didn't take it. I was looking just at the chart, but it was a nice move here. So we accumulate. All this was a range that was used for later on Friday, and this was a really tricky day. We were expecting, like, if we can move to the 50%, I was expecting to move here because of the volatility. We failed to do that on Friday. and I took a bad trade. For me, it was not what I was, not my kind of trades. I did it wrong, but it is what it is. So we gap here, we create a bullish gap, and we were expecting like kind of a breakaway gap towards the 50% of this. But like we rate the buy side liquidity here, this is an offset distribution of price action of orders, and then once we tap here, we start to fail to displace higher, and then we move aggressively lower to take this buy side sell side liquidity from the news here. So after that, I was expecting to move still higher, and I took this trade. I used this as an inversion. I took this entry at the 1020 macro that I use here. My stop loss was below this candle. And I took partials above these highs, and then moved my trade to break even, and then got stopped. I got stopped out at break even here. Here I was in the trade, come back again, and then stopped out here, this move. And that was my day for that day. But look how once we close above the new month opening gap on this day, here we close below, retrace into the range, we use this order block, and then come back again to the 75% of this new month opening gap here. So at the end of that day, the model of this day was not a deception, was a deception. We gap and rebalance the gap, and the move was to the same direction that the rebalance was done here. And this is for review for the weekly. So I will do this every week to help you to visualize the way I use regular trading hours into my daily protocols or routines. You can see how I am basically looking every day for a previous PD array from regular trading hours, and I use the gap to frame if I am opening in premium or discount in relation to that range, and I use the gaps and the range to frame if I am just in premium or discount or in close proximity to a key level based on these dealing ranges. And I try to execute inside of a macro or very close in proximity to a macro. When you have a lot of volatility, sometimes you miss the trade if you wait for the macro because price is moving really fast. But it is what it is. So this was everything for this review. I hope you enjoyed and take notes and prepare for the next week. This week it's gonna be something interesting because we are going to open the new week opening gap. It's gonna be inside of this new month opening gap. So do you see how we are having like a cluster of gaps inside of these monthly openings? And if you see the monthly candle, price is trading basically in all these levels here. We are just failing to move higher, but at the end of the day, I think, oh look, we just opened the consequent encroachment here. This is great. we take the sell side liquidity and the consequent encroachment here. This was not a script. This is wonderful. This gap should be rebalanced. This is the mechanism that I was told you inside of the community the other day. We're taking sell side liquidity into a level of fair valuation that is a consequent encroachment. So price is gonna move against that. You see? Wonderful. Just 120 points in 2 minutes. This volatility is just insane. So be aware of that and be careful with your trading, because if you don't have a stop loss or you don't do like a right calculation of your orders when you place a trade, you can lose a lot of money if you don't do it properly. So this is a new week opening gap. Let me annotate it for this week. Sorry for my dog, it's gone. He's crazy right now. New week opening gap, low, and new week opening gap, high. See how are we using the 21 and 112 point is a consequent encroachment of this new week opening gap also to accumulate more, and see if we can close this. Now these gaps are just amazing. Sorry, new week opening gap high, it was on Sunday. The date today is 9th February. And this was the low. Okay, and from here we're gonna measure the close price from the open, and we're gonna have the actual from the previous actual week. I will put like a little bit different. This is from the previous week and the actual week, the quadrants. You see how we are using this range between the fair valuation of previous two gaps here. And we are using the high, and we create this high this week. Well, this was everything for today live video. I hope you enjoyed this week and have a wonderful week for you guys. Stay safe.